Alright guys, we're going to be talking about liquidity, what you should know about liquidity, and how to effectively use liquidity. Liquidity works beautifully with our profiles, daily, weekly, monthly, 4-hour profiles. So that means our open, high, low, close, open, low, high, close. Once you establish that, you realize how simple liquidity really is. So let me explain in simple terms first. If you're expecting a bearish day or a bearish week, or 4-hour candle, whatever you're expecting, the candle formation would be something like this. So we have the opening price here. We're going to see a manipulation. So this is all liquidity. We want to see the manipulation being ran. And you want to see our PD arrays above here failing to hold. All right. And we want to see bearish PD arrays in action to take it lower. And as this candle prints, so let's say this is the weekly candle, right? We'll go 1 week here. Since this is a weekly candle, you can start utilizing the 4-hour order flow, the 1-hour order flow, and the daily order flow to find when our liquidity will be sweeping. Okay, so our first initial liquidity that will be taken out is most likely the first phase, so the first accumulation. Okay, so if we're talking this even in day trading terms, this will usually be Asia highs. Okay, Asia highs get swept by London. London makes a high of the day, and then we continue bearish in our given direction to our objective. If you do not know the objective for the price action, then you are going to be in the wrong side of the market. You're going to have the 50% bias, and you're going to FOMO into every trade. Okay, so what that means is you're going to look at this and you're going to see this as a breaker. All right, so I'll draw a bit better. You're going to see this as a potential breaker, all right? And you're going to try longing off it, okay? So that's what a lot of people do, because they fail to realize what the objective is and what the narrative is, all right? So don't get fooled. Allow price to show you that the high has been made. When you do have a bit of experience, then you can trade the total soup itself. These highs are rated at specific times, okay? But you can just utilize kill zones for this video. When you are trading this price action, you'll most likely get a previous candle sweep on the higher time frame. All right, so what that means is, yes, this candle got bearish, right? We had a bearish bias for this candle, but the previous candle, so let me see if I can kind of, move this away. So the previous candle can be just a regular candle, right? And this can just be seen as a indecisive candle where there is no displacement. Okay, no displacement, and then we get our previous candle sweep. So what this looks like on the lower time frames is this right here: accumulation, right? Manipulation, which is the wick, and distribution, which is price displacing lower. As we see this, we want to see price close below the previous candle low. Now, as we continue bearish, we follow the same sequence. Opening price. Okay, so let me make this more clean. Okay, so oops, let me get rid of this, and let me get rid of this and this too. Okay, so bear with me, because this will most likely open eyes for you guys, right? You guys will understand how price really moves. Now, since this candle's closed bearish, and if we have objective as this here, which can be like a monthly low, monthly previous candle low, an IDR, a fair value gap, whatever, right? Your objective is this area, this key area. Now, as this candle prints, what is it gonna do? Opening price, so it's gonna mess around for a bit, right? Because there's no volatility. Opening price, the daily opening price is usually around Asia. So if you're trading EU or USD pairs, EU, GU, CAD pairs, whatever it may be, they're most likely not going to move in Asia. All right, so you have Asia accumulating, and as you have Asia accumulating, London will come in with volatility, right? So that is time and price. Volatility equals time, time equals volatility. Once you realize that, you realize, all right, if Asia has accumulated, that means London should manipulate, make the high, then start displacing lower, and New York should continue the displacement lower till we meet our objective. okay? And that is very, very important you follow this. As this sequence is being printed out, what the daily candle, right? So the profile you're trading will look like is this, okay? So opening price, accumulate, make the wick. So that's the manipulation, okay? Beautiful. Make the wick and then start displacing lower, just like that. And then the wick will most likely tap the objective. And now that's where you usually partial, because if there is a reversal, well, you've already managed your trade appropriately. If they're still going lower, well, beautiful. We've entered ourselves here or here. We have no fair value gaps to retrace to, okay? And if we're truly bearish, we should continue bearish, and we should be making fair value gaps later in the price action, and we should continue displacing lower to whatever your drawn liquidity is, okay? So now let's close all this, and now let's look at this in a normal lens, okay? So what we can look at this is on the daily. On UJ, we don't have any fair value gaps to work with, okay? We have just swept liquidity, so now we have a reasoning to head lower. Now for your weekly profile, you want to know that certain days create, certain highs. That is usually respectful via news, because you're trading the high time frame. News is also a term a lot of people call for for time, right? It's just injection of volatility. Usually works as a catalyst to push price higher to our objective, or to continue lower once the objective has been met and you're expecting a reversal. Very, very interesting. Now, when you are trading bearish order flow, so let's say for whatever reason, we're looking for a sweep of this high to target this low here on the daily. So what we can look for is 50. What we can wait for is 15-minute order flow, right? So you're going to be following the 15-minute order flow. So what is this right here? Okay, that's a liquidity sweep. Can we confirm this as a potential reversal? What do we want to see if this is a reversal? Well, we want to see our bearish PD raise, like I said earlier, holding and displacing price lower. And we want to see our bullish PD raise, such as our, fair value gaps, already doing their job, right? So that means this fair value gap has pushed price higher, okay, to sweep this IDR. An IDR is a leg with no fair value gaps, okay? So once we sweep the IDR, we are now looking for a bearish order flow, right? And you'll see these will be taken at certain times, and the continuations will occur at certain times. Very, very interesting. So now if we go back into the replay tool, you can see that the 4-hour had the previous candle sweep, okay? So now if we, dissect this into opening and closing price, just like this, and we go back to the 15-minute, because we're still trading the daily profile as our drawn liquidity, what are we looking for? Well, exactly what we spoke about, right? Accumulation right there. Then you get the manipulation, which is taking all those sellers, right, that have entered too early, sweeping them, and then it is followed by displacement. And your displacement is usually seen via fair value gaps. Once you understand that, you understand what the objective should be, okay? We are no longer respecting bullish order flow, right? And if you have a very, very good bias with the higher time frame, you can allow your higher time frame or mid-tier time frame PD raise to give you another entry, okay? So going back to this, hopefully it's not confusing you guys too much, right? But we have the fair value gap here, and we have a previous candle sweep. As price closes below this candle, right, we're going with the intention of this candle here, so this fair value gap should not displace price higher. But what it can do is give us a retracement, right, in the lower time frame. So just like this. So we have the fair value gap being mitigated, right, right here, and we have bullish order flow for a bit. But you realize that this fair value gap failed to create new fair value gaps, and rather it swept the IDR, okay, making the high in the 4-hour candle. So we have this as 9 a.m., right? And you're going to have your opening price at 1 a.m., okay? So now this candle high has been made. So we're expecting a continuation bearish, utilizing our fair value gaps. And this could be entry Just a very, very simple, stop loss there and TP down here, right? Very, very simple. A beautiful, say 4R or 3R, whatever you guys want to call it, right? And you're just catching that with the objective. And your liquidity, right? They're usually sweeping IDRs, right? So don't buy this fair value gap expecting it to run 600 RR. That's very stupid. Very, very stupid. But what you can do is trade this. So you're trading the manipulation, right? So now, because we spoke about this, right? So I'll color code things for you guys. So it's very, very easy. So we have accumulation right here, okay? Then we have the manipulation, which I'll make that as that, okay? So accumulation, manipulation, and you're expecting the distribution to occur, right? So which can be, I guess, this whole thing, which I'll make a very light color, okay? So accumulation, manipulation, make the high and displace lower. And as we spoke about, you always get some sort of entry utilizing the lower time frame, right? But your higher time frame is where you should be taking the stress, using your brain power on the higher time frame rather than the lower time frame, okay? So we have that. And now the same thing occurs, right? Everything's fractal. Everything is fractal. So as we just spoke about here, we have the accumulation, okay? Right there. Accumulation. Then you have the manipulation, right? Which would be that move up, taking those early sellers, right? And then you are trading the distribution lower, just like that, right? AMD, power of 3, yada yada. And our liquidity here was just our previous day low. Every candle high and low is a liquidity in a lower time frame. Okay, so if you are utilizing the higher time frames, like as you can see in the top left, weekly, monthly, 4 months, etc., you have a lot of price action to work with. Now, if we jump down on, let's say, the 1 minute, okay, and now we decipher this again, right? We know this here is going to get swept because we have a fair value gap, okay? Fair value gap being tapped, displacement lower, right? So now this works in lower time frame too. And now we want to see a mitigation of this order block, or you could already have a fair value gap entry here, or if you want to play safe, have an entry like this. And now what are you going to target? You could target 2R and let it run, right? Or you could target the overall objective and then scale into your trades. Beautiful. Same thing here, right? Accumulation, manipulation, so taking all these orders and distribution lower, right? Same thing here. So let's get rid of this there. And let's get rid of this right here. So right here. Okay, beautiful. If I can just do this, bang. So accumulation, manipulation. So let's see if the high's been made, right? How do we know if the high's been made? By bearish order flow now in play, right? So you could confirm this with, multiple bearish order flow, multiple fair value gaps, displacing price lower, just so we know we aren't in a accumulation still, or we aren't still bullish, okay? And you can see that by price failing to displace higher. Rather, it's resisting. It's sweeping highs and it's rejecting them, and we're heading lower. Very, very interesting, okay? And as we spoke about here, that could have been your beautiful entry. This is the 50-minute fair value gap mitigation, right? And this will occur in certain times, right? So right here, you get the retracement within, right? Within London kill zone. How interesting, right? And your high has been made. Usually, Asian pairs, right? The highs can be made in Asia, right? So like JPY, AU pairs, the highs can be made in Asia or just the Asia 4-hour profile. And these opportunities, right, where you have this sweep here, it's usually a fair value gap, right? So sweep at this high, beautiful. We no longer want to see displacement higher. We want to see bearish order flow inflow in action, and we want to see bullish order flow failing to hold, right? So we get that, we get our change in state delivery, right? And now we're mitigating the order block and we're displacing lower. Very, very interesting. And you'll always get a fair value gap entry later on, right? And what are you going to target? Well, the overall objective. Beautiful, right? So we could, you could have a regular entry of that 15-minute fair value gap, and you could also scale in the 1 minute, the 5 minute, just the lower time frames to, you know, really increase your RR. And that's what a lot of people fail to realize is when you have a swing opportunity, you will have a scalp opportunity present too. So you could really compound, I guess, your progress, right? I'm not going to say money or anything because it's kind of scummy, right? Not everyone's making money yet, but you could really just understand order flow just like that. And if you look at price, just like this, right? You could really just see how easy liquidity sweeps are. You know, all these highs, they're taken in certain times, right? Aligning with the profile of the 4 hour, of the 1 hour, the daily, and so on. Okay. So that's a very, very simple way of just looking at liquidity. I'll be making more videos on liquidity, but this is one of the easiest way you could down pat liquidity sweeps. All right. Hopefully you guys enjoyed that.